Hello guys and welcome to ShortCryptology, where we talk about crypto related topics and gaming. Today I want to give you a little bit of a new kind of content. It's meant to be a little peel of knowledge. I'm trying this new kind of video where I select increasingly complex topics in technical analysis and I give a quick little idea about it. So, in this case, I'm wanting to talk about uptrend, downtrend, and sideways trend with a couple pictures, and then I'm just gonna read an article about it, like the hot parts of the article at least. The idea is to make a series of these little lectures. This first one, since this entire introduction and everything might be a bit longer, but my plan is to make them just a few minutes long so that people can spend some time, like a few minutes, and learn something new that will hopefully give them a clearer picture of how to read a chart and how to use this knowledge to make money or to prevent losses and such. Now, let's dive into it. In this case, I'm showing a couple pictures that I just found on the internet about what a downtrend and an uptrend is. It's fairly natural. I'm sure people can see this one without really having to study it, but it's good to always have a good picture, because in this case, what is an uptrend? An uptrend is when a graph or a chart shows peaks with new higher highs every so often, and between those there might be a higher low, meaning that in general the chart is growing, but of course in market action there's always a little bit of an uptrend or a downtrend. Like, it's normal, you're not always going up or down. The market is constantly in movement, and it's normal. And why is this important? Well, because some people sometimes forget where they are. Let's say you are in TradingView and you see a down action. People can become very bearish and start to think, oh my god, I need to sell everything, we are going to lose all our money. But maybe that's just a higher low, that's you're zoomed in too far. Some people read charts by looking at hourly charts or even shorter times, and those don't really give you a whole lot of a big picture. If you're zoomed in too far into an uptrend or a downtrend graph, you could get the wrong impression. You could think that we are losing value or in a downtrend, when actually if you zoom out and look around, you can clearly see that we are actually in an uptrend. You simply missed the context and you were only looking at a very small portion of the whole chart. This is very important. Now, the downtrend is quite the opposite. It means that the whole chart is trending downwards. So you are maybe still growing every so often, but in general, the value of the coin is constantly going down, marking lower highs and lower lows constantly. Meaning that when it peaks once, the next peak will be lower than the previous one, and same for the lows. This is very good to see, because you could maybe use it to see if you want to sell, or if you're a daily trader, you can take your decisions that way. Another thing that's interesting is the sideways trend, which is usually when you're not really making new highs, you're not really making new lows, you're trending around the same range, so to speak. It doesn't have to be perfectly horizontal, but if you're not really breaking above the older high, but not falling under the previous low, you're just having a little bit of sideways action, and that usually will end up breaking eventually. Well, eventually does do, and that price will eventually go up or down and start a new trend, being it down or uptrend. But it's good to have these three ideas, because people tend to watch charts without thinking of these trends. Sometimes zooming out, getting a better context view is very important, because it helps you tell what's going on around the last few hours or last few days. You could be very bearish because your price is falling and you're thinking of selling, or you already did, while if you had thought about this, you could think, wait, we are in an uptrend, this is just a new higher low, it happens, it's normal, but it's likely to go up. If you are in a downtrend, you could think the same, like maybe I should just sell instead of enduring all these lower highs and lower lows, seeing the price go down and down and down. While in a sideways trend, well, this information is not enough to really tell, because after a sideways trend, you could be going up or down. Other stuff will influence you, and the more we look into technical analysis, the more you'll see that there's lots of indicators and other factors that you have to account for when you're trying to figure out when to sell, when to buy, if it's worth holding or just getting out of that coin and buying a different one. And in the end, you never know. This is all statistics and analysis on what's most likely to happen. You could have all the bullish indicators of the world. The coin could look like it's going to blow up any second and still go down and become worthless. It's a risk that you have to accept with crypto. Now, usually, if a coin makes it in the top 100, it's unlikely to really fall and become worthless, at least short term. But you should always consider your investment in crypto as something that could be worth nothing in the future. It's a good way of thinking, so that you don't invest too much and lose everything in case things don't go your way. Now, I'm already a little bit, well, way longer than I thought I would be, but let's just skim this article to get a little bit of an idea. I took one of the pictures from this article because I found it very good and concise, but let's have a look. So, yeah, trends are something people analyze to see where the market is going. Well, why do prices move in trends? Usually, the market does whatever it wants, first of all. That's my opinion right now. No matter what people want, what people expect, what people have planned, the market will still do whatever they want. Even big companies or whales might fail to manipulate the market, especially with the growing market cap. It will be harder and harder to manipulate the market. I'm hoping it will become much bigger in the future. But I believe that it's partially psychological. A lot of the behavior of the market, if not all of it, it's psychological. People have fear, people have opinions, people read news. A lot of these things will influence the market one way or the other. The spot, oh well. well, this is just an advertisement for their video, who cares? Yeah, a recent uptrend is not a cause to be bullish, that's what I was saying. You always have to look, zoom out, have a little bit of context and see. But even in an uptrend, like an uptrend can reverse. So if it's going down but you're still in an uptrend, you're still above the last low, it doesn't mean that it's not gonna break it and go down. Especially when it shoots up, you always have to expect a top and then a moment where the coin is likely to go down and stabilize before continuing or falling. The all-time highs are actually very important because oftentimes a all-time high is also a very strong resistance. Coins can break and create a new all-time high. They do it all the time, but oftentimes the closer they get to the all-time high, the more selling pressure comes in and they can easily bounce back down and stabilize anywhere under that old all-time high. Second of all, an all-time high might not mean anything. For example, a lot of coins reach that all-time high during the first hours or days or weeks of being released. Usually, like during the moment it goes live on some exchange or something. But that all-time high was actually speculation. Can take years for a coin to beat it. But if you don't consider that first, like, crazy price action that is oftentimes totally worthless and it doesn't mean anything because it was just speculation, then yeah, all-time highs have a very good value in many analyses. And it's also where people who plan when to sell or buy, often they put there a good portion of their selling. Like if you right now are at 30 cent and the all-time high was, I don't know, 60 cent, maybe traders will decide, okay, I go, I don't know, 10% under that all-time high and I sell. I put a sell order there. If the price ever goes close to that all-time high, sell. Why is that? Well, because it is likely to, or it's possible that one day it will go back at that all-time high. But how likely is it to break it? Well, depending on the coin and on the context, there's so much that needs to be considered, and then you can't just use the trends to get an idea of that. But it's likely or possible that even if it does beat that all-time high, it might not go too far. So selling 30, 40, 50% of your investment, depending on your strategy, it's good, like when you get close to an all-time high, because you might not get back up there anytime soon. Yeah, the history tends to repeat itself is a very interesting theory, and it's actually fairly true. I haven't been trading for the longest time, but I've seen many trends repeat themselves. And, well, the most sacred and believed by everyone trend is the barren bull markets. People believe in it, people expect it. It won't always happen when people expect it, but yeah, everyone eventually sees it happen. And somebody didn't prepare, somebody sold everything, and that's actually why the bear market happens. Because people want it to happen, people see and think it will happen, people sell to not lose when it will happen, and thing is, all that selling pressure is likely to be one of the reasons why it happens. If everyone is selling and nobody's buying, of course we have a bear market. Why would the price stay up if everyone is selling and nobody wants it? There you go. Incredible, hey? Psychology. Trend indicators. Well, yeah, just more advertisement stuff. Moving average and stuff. It's these are all topics I want to cover in different videos, and I'm way over time right now, so I just want to show this picture once again. I think this picture in itself is enough to really get the idea of the trends, and this is a very simple concept, and I try to put as much information as my knowledge allows in this first tiny little lecture. I hope that I didn't bore anyone. Let me know how you want the next episodes to be, and I'll try to cut it shorter for sure. I'll try to organize a better script and have a clearer idea on what I want to cover and how fast, etc. But I hope that this first test goes well, and also do please give me any feedback on how you want me to improve on it, and I'll try to make the next one much better.